Welcome back to Budget Bites. Please make sure to like and subscribe if you enjoy this content. Comment below if you want me to make a separate video on any specifics of this content. And always remember to consult with a financial advisor before making any serious financial decisions. Yada, yada, yada. Now let's get into it. Today we're going to be looking at the stock market. First, what is a stock? And no, it's not just something that makes Pelosi and company a bunch of money. Well, I mean, it does that too, but anyways, in simplest terms, a stock signifies ownership share in a company. When you purchase a stock, you buy a piece of the company's future profits and growth, hopefully. Why would someone consider stocks as an investment path? Well, historically, they've outperformed other assets like bonds or savings accounts. However, as most of you are probably aware, their journey is not without turbulence. While potential returns are high, stocks are susceptible to market volatility. Selecting the right stock is both an art and a science, and actually, if I'm going to be completely honest here, it can sometimes feel like a total crapshoot. That's why fundamental analysis is key. Fundamental analysis is about evaluating a company's financial health, understanding its position within the industry, and evaluating its future growth potential. Now I can do an entirely separate video on this and go more in depth if you want me to, and if you do, leave a comment in this comment section below. But for right now, as a quick overview, here are 5 key financial ratios to consider when performing fundamental analysis. First, we have return on equity, or ROE, and this gauges a company's profitability by revealing how much profit a company generates with shareholders' money. Second, we have price to earnings ratio, and this is represented by P/E, and it measures a company's current share price relative to its per share earnings, and this often helps investors determine the market's valuation of a stock. Third, we have debt to equity ratio, which indicates the proportion of equity and debt a company uses to finance its assets. Then fourth, we have the current ratio, and this highlights a company's ability to cover its short-term liabilities with its short-term assets. And finally, fifth, we have earnings per share, or EPS, and this represents a portion of a company's profit allocated to each outstanding share of common stock, offering insights into an enterprise's profitability. That said, fundamental analysis isn't the only player here. Do keep in mind that technical analysis is also a key factor. And technical analysis provides insights using statistical trends from trading activities. This is the shit you see all over the YouTube screens that make trading windows literally look like they were regurgitated from an astrophysicist notebook. Now, all jokes aside, before all the traders jump on me and get angry, patterns in historical data can predict future stock movement, but it's typically used in conjunction with fundamental analysis. Both have their place, and both are key analyses. Now, the stock market is influenced by many factors. Some of these factors include economic indicators, geopolitical tensions, central bank policies, and Reddit warriors. Wait, why is that on here? Oh yeah, GameStop. And even global events can sway market sentiment, but a diversified portfolio can be your best shield against market volatility. If you would like to learn more about portfolio diversification, I can definitely dive more in depth into that in a separate video. But for now, a simple but good article on portfolio diversification titled 3 Tips for Building a Diversified Portfolio by The Motley Fool is definitely worth checking out. I'll leave a link to that in the description below. Before now, I'd like to go over the 3 main points that they make in the article. Point number 1, they note that one way to jumpstart portfolio diversification is to invest in several stocks, and they also note that a good rule of thumb is to own at least 25 different companies from various industries. Now, the second point that they make is to put a portion of your portfolio into fixed income like bonds. And the third and final suggestion that they make is to consider investing in a portion of real estate. And this suggestion I absolutely get on board with. Yes, can't say it enough. Absolutely. But they also discuss in that point that the option of investing in real estate trust, otherwise known as REITs or REITs, if you don't have the income to go out and get a investment property. All right, moving on. There seems to be some kind of myth that allures people to trading with some kind of fantasy of making a lot of money very, very quickly with little to no effort. Now, certainly you can make short-term gains, but there is plenty of risk involved with that. If you're trying to be a short-term trader, you're going to be faced eventually, whether you like it or not, with the reality that you'll need to learn risk management, bankroll management, and a bunch of other skills that will take years and years to cultivate. It's not some get-rich-quick scheme with little to no effort. That just doesn't exist. And that's if you even last beyond your first 2 trades. The successful traders aren't lazy. In fact, they're hyper performers. They wake up, they trade, and they study, they eat maybe, and then they go to sleep and they repeat, day in, day out. This is why most seasoned investors endorse a buy and hold strategy for the average investor. As Warren Buffett wisely put it once, our favorite holding period is forever. Before diving into stocks, formulate a financial strategy. Understand your risk appetite. Set aside a designated amount for investing and never, ever dip into funds meant for essential expenses. The stock market is not a place for your emergency savings. To close, remember that investing is a marathon, not a sprint. It's about discipline, continuous learning, and patience. Equip yourself with knowledge, consult experts, and always keep abreast of global happenings. In the vast realm of the stock market, staying informed is your greatest asset. If you enjoy this content, like and subscribe. Check the description for links to any articles referenced, and finally, feel free to scan the QR code. There you will find multiple links to social media pages, a website that will be coming soon, it may not be up yet, and Patreon, where your support will absolutely be redirected towards expanding the channel and accelerating its growth. At the very least, make sure to follow us on Instagram. There, we'll post regularly each week with quick tips to help you move forward financially. Have a fantastic week, and thank you for watching.